Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Earnings season heating up once again, fourth quarter season kicking in really into high gear this week. And here to talk about that and a little bit about consumer sentiment lately, too, with all of the numbers for holiday sales and consumer sentiment index numbers coming out last week. Shiraz Mian, our research director at Zacks.com. Stock analyst Tracy Reinig joins us this time around as well, as does that top market technician, Kevin Matris. So, earnings taking front and center, the proverbial ton of earnings coming out this week for fourth quarter. You got last week, the backdrop was kind of lowered with Intel earnings and JP Morgan earnings, both having very different effects on the market. In fact, JP Morgan earnings took over and kind of muted the market reaction to the Intel report, which was a good one. This week, you've got some marquee names coming out, among them IBM, Google, Starbucks, McDonald's in the consumer sector. So, having said that, I guess the important question here, or the question that's on everybody's mind, and there probably are many, Tracy, do earnings present the biggest challenge to the stock market? Or is there a bigger one looming out there that has been overshadowed by earnings?
Well, this week it's definitely earnings. And, I was kind of bullish going into this earnings season until last week, I have to admit, because, the Intel numbers were good. We know PC sales are up. That's their category. That's all good. But the JP Morgan number was not good. And the fact that they could not give any guidance all these quarters into this crisis, and we're apparently on the recovery, and they can say, we don't see the recovery? That's not good.
Yes.
And then this week we have Bank of America and Goldman Sachs both reporting, and then a couple of the big regional banks like Fifth Third Bank and KeyCorp.
A lot of banks this week.
Yeah. Right. Fifth Third Bank hasn't made any money in 5 quarters, and they're not expected to this quarter. So when will they make money? I don't know. We're kind of, to me, we're getting beyond it's recovering to what's really going on here, at least in the banking sector, and we're not seeing what we need to see.
And I'm going to circle back to that banking sector a little bit later on. But is there a bigger challenge out there for the stock market, or are we just going to have to take this on a week-by-week basis?
I think it's week by week right now.
Okay. So, Kevin, earnings beats have really become routine, haven't they? Have they become so routine that we need something else now to motivate investors?
No, I don't think so. Let me address something that Tracy said. She's a little bit more negative than I am on last week's earnings season. But you had 3 big bellwethers. Alcoa did come out, and they did poorly. They missed on earnings, but they did manage to surprise on revenues. In all fairness, they had special items, some restructuring costs, but they are in a better shape now than where they were last year at this time. And if you were to look at their earnings estimate revisions, you can see that they are all up double digits across the board, and their projected growth rates are up sharply as well. Then you look at the other bellwether, Intel. They came out in the middle of the week. Their earnings numbers were great. They crushed on earnings. They crushed on revenue. Their earnings estimate revisions are up, and they too are projecting solid growth rates. In regard to JP Morgan, they weren't as bad as everybody is making them out to be.
It was their reserves that got everybody's attention, right?
Reserves, and people were grousing about the fact that they're not going to be, I believe, reinstating the dividend or increasing the dividend. But I think that their earnings were halfway decent. It is true the banks are not out of the woods, but I believe the worst is over. And I think the reaction that we saw last week to what I would consider to be a net positive earnings week, I think it was nothing more than a correction from the effortless gains that we had seen at the end of the year and the beginning of this year. So I'm still optimistic that this is going to be a good earnings season.
All right, you guys are going to force me into this banks issue sooner rather than later. I can see that from now. But let's talk about the banks, since you're harping on them already. I've seen forecasts out there that we're not going to see sustainable trends in the banks here in the United States until next year or even maybe 2012. What do you think about that?
I think that's right.
Is that a possibility?
Well, I mean, we only have JP Morgan right now, so we'll know more this week.
Right.
But their loan portfolio continues to deteriorate. It's not going the other way, which we should hope to see at least a little bit going the other way. And on the conference call, they said that with it's unclear what's happening with housing, and this all comes back to the housing issue. If we start to see some kind of government mandated cram down on the underlying mortgages, they said on the conference call they're going to have to put in huge amounts of reserves if that happens, which so far it's not. But the way that the government is handling the housing issue right now isn't working. I think everyone can say that.
We have housing starts numbers out later this week as
Right.
well, and we don't know
Right.
what that's going to show either.
Right. So, we're seeing deterioration in their credit cards, on other consumer loans, still with mortgages. To me, that's not really turning it around.
All right, I know I can always count on Shiraz for a more macro view here. Let's broaden this out a little bit. Earnings season, a lot of people characterizing this one in particular as a critical turning point for the stock market. Do you agree with that?
It is, in the sense that we should see the beginning of a good sustained growth on a year-over-year as well as sequentially going forward. Mostly that's because of the relatively easier comparisons from the end 2008 numbers and also the earlier 2009 numbers going forward. But we are at an inflection point. We saw the broader economy coming out of a recession in the third quarter. The estimates for the fourth quarter have been steadily going up. There are some estimates now as high as 5%. And many of these things ultimately do show up in top line and bottom line growth in the corporate sector. Just one brief comment on the banking issues that you guys were discussing. Wall Street has been doing extremely good. So the investment banking sides, of whether it's JP Morgan or later on Bank of America or Citigroup, and the pure play investment banks, Goldman Sachs, and they've been doing very good. In fact, that's been the primary reason for all this talk of huge bonus payouts and all this stuff. It's the retail banking side, which is the problem, and even the problems there are nothing new for us with 10+% unemployment rate and a huge blow up in the credit cycle the last 2-3 years. We knew the problems.
All
the
right,
extent of the commercial real estate problems are also coming. What we are not happy with is that many of these corporate chieftains are not giving us a visible and proper guidance over the coming quarters, and that was something that Tracy rightly referred to.
So what you're saying is investors have to keep the separation between investment banks and retail banks in mind when they're hearing about these bank earnings.
Absolutely.
Coming out this week.
The problems in the banking sector are not new. We have known this. We knew the huge investments that they have done on the housing side, both residential as well as commercial. These portfolios have been problematic. They have not been extending credit. We have been hearing about it all along. The other weaknesses in the broader economy, namely the double-digit unemployment rates, have been weighing on the rest of their asset portfolios. So the broader issues in that sector are there. We need some clarity from these leaderships and management teams. When do they see the cycle turning for them? And we're not seeing that. So JP Morgan's overall numbers were very good, but their lack of giving us any guidance was basically what put the stock and the overall market under pressure.
All right, he brings up some good points. But having said all of this that we've said about the banks here so far, Tracy, financials still a buy?
I would watch and see what happens this week, because they've had a huge run up, at the beginning of last year, and then they've just been kind of trending water. I would wait and kind of see what they say. It all depends on what kind of financial you're talking about. The big guys like JP Morgan, a regional bank, international banks, some of them are much better situated going into this year than a lot of the domestic U.S. banks have been.
Well, Kevin, a lot of people would say, but still the financials have those easy comps to benefit by.
I'm not sure. I mean, we're going to see a lot more banks reporting this week. As Tracy said, there's 300 companies reporting this week, another 750 next week, and thousands more in the weeks to come. But for me, I like the smaller regional banks. I like the alternative financing companies. So that is where I would be putting my money if you're going to be looking at financials.
All right, speaking of easy comps, Shiraz, and then we'll get off into another area here real quick. Easy comp's going to be phasing out as we go through this year?
Not now, but towards the second half of 2010. If you recall, the last quarter of 2008 and then the first quarter of 2009 was still quite weak. So going into the first quarter of 2010, we should be in pretty good shape. But going forward, definitely comps start providing a headwind to all of these metrics.
All right, Kevin, it was a mixed bag as far as retail sales numbers for the month of December.
Right.
We had stronger than expected holiday sales period, but overall on the aggregate sales for the month still not showing a real good picture.
Right.
What is that doing as far as consumer sentiment is concerned? Because we were hoping the consumer was going to come back here.
Right. Well, when you look at the retail numbers, I think they were pretty good overall for the year. It is true December was down on a month-over-month basis, but if you were to look at December on December from a year ago basis, right, month-over-month from a year ago, you can see that it was actually up. And I think if you were to take a look at the broader picture over the last year, there were more months where you saw sales increase as opposed to decrease, and the increases were a lot larger than the decreases. So I think sales have really hung in there. What's interesting about the consumer sentiment is that consumer sentiment is also on the upswing. What I have found fascinating, though, is this. When you look at that consumer sentiment index, you have the current conditions component and you have the expectations component. The current conditions component has actually been coming in stronger than the expectations component. You would usually expect to see the expectations component be stronger if, in fact, you're expecting good things. But here's what's interesting. As the future becomes the present, and as the expectations become current conditions, the current conditions continue to do better than what people had hoped they were going to be in the past. So I think this bodes very well, and once you can see a little bit of light at the end of the tunnel on unemployment, I think you're going to see a very robust increase in consumer sentiment.
All right, I just want to get a couple of more reactions real quick because we're running out of time. Tracy, consumer coming back anytime soon?
Better than you might expect. Yeah, I think that people have been holding back for a while on just regular kind of purchases, and they are going out there, but they're going to look for value.
All right, Shiraz, consumer coming back?
I agree. We need to see some positive movement in the labor market, and if we see that, I think that's a fair statement. Consumer is coming back.
All right, that's the latest thinking from the round table. And with everyone here, I'm Terry Ruffalo.